weekend all. Ira Epstein, and here we are with your weekend edition of your Spider Stock ETF stock market wrap-up. And we'll use the weekly charts for this week of April 26th. It is Saturday. That's why today's that date, 2025. All right, my friends. Interesting markets. You saw today that President Trump did go to Pope Francis' funeral. He met with Zelensky at that point, and from what I understand, they had a good conversation, whatever that might mean. Steve Witkoff has met with Putin this week, and I understand he's met with the Iranian delegation, trying to put together deals, but nothing seems to be coming yet. Now, I keep hearing good things. The president today, quietly, I read on one of the news services, has extended where he's not tariffing one of Gazprom's subunits. Okay, letting Putin go on, giving him a reward if he can get something done with Ukraine. But he's also said at the same time, you've got to stop hitting the civilians. So a very clear line in the sand, maybe not as deep as you'd want to see, but it's there, where the president said to Russia, it's time to lay off the civilian population. What he's talking about is obviously the big cities. So we will see. If you see that they're hitting them again, it means he doesn't have sway with Putin. That's how I'm going to read that. This is a week where we're going to get, at the end of the week, the jobs report. The market is looking for 135,000 new jobs. We'll see what that comes in like. We also get a lot of other reports and productivity and so on coming forth. We're going to get the Dallas Federal Reserve. They're going to update their monthly regional manufacturing outlook for April, and that comes out at 9:30. The last report was terrible at a negative 16.3 reading. We'll see what happens there. 1/3 of the S&P is reported now earnings up. As much as analysts prepped everybody, oh, this is not going to be good, up. What about no guidance? I'd say the majority of the companies are putting forth guidance. So we were told to expect them not to do that, but the guidance they'll give you, ideally, will be downgraded. They're not going to go bump, bump. Hey, we got cheerleaders. This is going to be good. You don't want to do that in this market. There's too much unknown. But the simple fact is the stock market, after the big break that it's had a little bit of whew. Now, I'll talk about earnings and so on in my morning updates for my subscribers and so on, and you during the week. I won't do it right now. If you take a look at the market behind me, a very mixed day in the stock indices. They were up. The futures were very mixed. They weren't with this that way. You can see that Amazon had another gain. Airbnb still alive. You wonder how they're going to do. The spring summer is right in front of them. I would think they do well overall compared to people that have to travel on planes to go somewhere and the hotels, just because of the nature of their market. Rivian, Tesla, GM all had a better week in the sense that they've been told by the president that he's rethinking the tariffs on parts that they so desperately need. Now, the simplest thing is to look at the USMCA agreement with China and Mexico and Canada, and allow those parts in. But there's a lot that come from China that he needs. We saw that in China, they have decided to blink, and they want certain jet parts, Sauber and Boeing parts that they need very bad. Now they're going, well, we can't shoot ourselves in the foot. They're also rethinking what they said on leases of planes. There's a lot of third-party leases that you got to be careful in their airlines. They can come up for this 125% tariff. So there's rethinking going on. Everybody got into this so fast that, number one, I think it's meant as a tool to sit down and negotiate, and we haven't gotten to a deal anywhere yet. Do you disagree with that? If you do, write me, because there are no deals that I know that have been done. I think the quickest way to get to a deal and make everybody feel good, listen, President, Mr. President, what's wrong with the letter of understanding? We're close. We think we can work this out. This is where we'll be. We don't want to hurt the economies yet, but if we don't get it done by such and such time, then the tariffs go on. What would that do? It would show that you're far along. I don't know that you can make some of these deals in the time frame that we're given. There's just so much at stake, both economically and politically for different countries. All right. One of the stocks that has been beaten up, it's down 60% from 2024. Here's 2024. Here's Boeing. You're down to the $20 level. At what point does this market get to the point where it's worth looking at? And I've reached that point where now I want to start looking at it on the charts that we're going to see here. You have changed the swing line pattern where you've got higher lows, higher highs. That's the first sign to me that the market's trying to be bullish, and it's had waves of selling down here, and here. I'm sorry that that cursor came up right there, that arrow. It means nothing. My kitty walked on my desk again, and she can do anything. She's my baby. Lower highs, lower lows. The resistance, as I see it, is going to be the 18-week moving average of closes. If the market closes over 21.29, then what I look at on this is, finally, I've gotten a signal where I actually have an uptrend at work that might work. I didn't really have them back here. I certainly didn't have them back here. I didn't have it here when you popped. This could be the first series where it does it. So it's on my watch list all of a sudden. I did this with Boeing, and it worked out to be an interesting, if you're a subscriber of mine, I'll let that speak for itself. I'll leave it there. And they're still in those trades. In Intel, lower highs, lower lows, okay, and changed. And Bollinger Bands giving you an idea that the market's been trying to hold them. You did get under them back here on this carnage that happened, and for a while back here. But now I'm thinking that you're going to have a harder and harder time staying under the lower Bollinger Band. Doesn't mean you can't, but I think that. What else? I think the company is shedding itself of people, fixed costs. That's going to happen. I think their product line coming in. They're discovering under the new guidance of their new CEO, what are they? What business do they belong in, and what don't they? They've got to come out with products. They've got to keep business growing. I'm not saying it's turned around. I'm saying it's turning around, present tense. So get up and close over 21.29. I might get very interested in that from a technical perspective. That could give you a first target of 25.25. You're oversold. The swing line is up, but the bias is down as you haven't closed under the 18-week average of closes. Another market that's acted real well has been the CME group. They've come down, but they're still holding higher low, higher high pattern. Keep your eye on this week's low. If it's taken out this week or next week, I see problems then. Then I think the stock goes to a minimum of wherever the 18-week average is, but could be filling in a void down here if that occurs. In other words, I don't think that should happen. In Netflix, I had been looking for the 1100 zone, as I've said almost every day in my research to you at the end of the day updates. You got there finally. You're now at 11,153. And I do think this is a zone where people should be taking money off the table. If you look at past times that you've hit new highs in Netflix, it's pulled back in fairly short order after that on a weekly chart from that, and this is certainly a new high. In MCHI, the Chinese shares, as I'm looking at what they're doing, I don't see them in a downtrend anymore. I see them neutralized. I don't see a trend play at all there. Home Depot, sort of like, a little bit feeling like Intel, higher lows, higher highs. The market is now held comfortably the 100-week average and the Bollinger Band. I think there's going to be room to move up here a little bit on that chart. When we come to Uber, market is taken off to the upside. I know all of my subscribers are applauding. We have 3 stocks that we own right now if you follow my recommendations. Doesn't mean you should, by the way. And they're Uber, Boeing, and Uber, Boeing, I forgot the third. It'll come. NVIDIA, that's it, NVIDIA. And NVIDIA you had bought, if you followed me, way back, I think 2023. So it's been quite a while. And yes, along the way, we cull and I try to add. And then I have daily and weekly recommendations that come out. It's something you should take a look at if you're serious about it. And I don't post a track record. I'm not interested in managing anyone's money. It's just what I'm seeing off the charts, my way of looking at it, and I follow a trade until it wins or loses, and then I stop following it and add others into the daily recommendation list. It's that simple. No track records published other than keeping with current trades. And it's not available to the general public. You've got to get in there, either take a trial or be a subscriber. Higher lows, higher highs, looking here at the 82.44 level as resistance. Yeah, I am. I do think you'll have some trouble up there. But Uber's one of these to me like a NVDA. I want to own it because I believe. I want you to own it especially, so I want to own it. When I say my service, I want you to own it. Because I think it's like NVIDIA. I think they're the leader to get the business off of autonomous driving for people that want to call a cab, all right? That's the reason. We know that Waymo, they want to produce the car, so you own it. You don't need a cab. I'm out, go park yourself. That's going to work too. I mean, it's not going to just all be cab driving, or that type of driving. KRE. Lower highs, lower lows. I think this is a bounce in a market that's still bearish. I look for resistance up at the 18-week to the 200-week average. It did what I wanted so far. It held the first challenge over a 3-week period of the 100-week and the Bollinger Band. And as I told you and I said, I tell traders not to be short into that. That's where I think the pros lift money. But I think the pros might deploy new money on the short side once the market clears up an oversold condition. In XLI, a bear market rally. The market held the combination of the 100-week and the Bollinger Band. I look for resistance at the 18-week. It would take a lot to make me say, hey, I think it's time to get long this market. I'm not seeing that here. On energy, I am not friendly energy long term. I am bearish energy. To get me bullish, you've got to make trade deals. And I'm not convinced we're going to make trade deals in the time frame that everybody thinks. And I'm very nervous that the Trump administration could push us into a serious recession. And if we go, others go. It's really that simple when you think about it. So I look at the market and I'm viewing this number 87.64 as a real important number. It's almost tying in now with the 100-week. That's where I look for the big resistance. It had been a big support number. Do you see that? You kept going down to it, and then you'd get back over that 18-week. But once you get under it, it flips its role into resistance. In the dollar, I'm still bearish. I do think that you're down to a number that's so important. When the dollar goes on the index to what we call a fourth price count, and I did this report that you had a chance to see last week. I'm going to do another report on something else this week for you. A fourth count, you rarely go to a fifth one. If you go, it's the 88 level. It's almost 10% lower. Why would the dollar go down there, and what would be the ramifications if it did? Could it be people dumping wholesale U.S. holdings? It could be. Could be you don't make any trade deals, and we've caused a recession by that with all this. I don't know. But the fourth is generally where the market really fights a battle. And it's rare that you get to the fourth. You more typically stop at the first, then a little more percentage for the second and the third. The fourth is unusual, and I want to see what the market does there. In the gold market, no, I don't tell clients to own over a Bollinger Band. Remember, when you hit 3,500, people are already coming out. We're going now to 38 to 4,000. Everybody's coming into the market. Everybody typically in gold gets scalped, but the long-term holder. I'll wait for the first sizable correction to make a decision what to do. This is not what I call a correction, a half a percentage point on the week. You might call it that, I don't. Therefore, it's still in the bull camp. It got ahead of itself, but it's still in the bull camp. You got a higher high, a lower low in copper. I don't see anything you'd want to do with that market at all, and there's my news. So You keep hearing me talk about the Bollinger Band and where we're at. Why don't you learn how to use it yourself? As I said, I use it in spiders, ETFs, stocks, futures markets. If you can chart it, you can use it. It really works that way. It'll work with candlestick charts. It works with bar charts, which are my favorite. Long-term charts, shorter-term charts, 15 minutes. I use it on all of them. And I teach you why and how in the course. It's very inexpensive. And with the course, by the way, you get 2 weeks access to my Spider ETF subscriber videos and my future and my writings that come out twice daily, Monday through Thursday, one on Friday morning, one on Sunday night. So go to iraepstein.com, education, and do yourself a favor. Make the best investment you can. Invest in you. I'm Ira. I'll catch up with you on Monday.